So as more and more investors look to diversify their portfolios outside of traditional stocks and bonds, one of the most popular asset classes currently is crowdfunded real estate. So many investors are looking to get exposure to real estate without potentially going out there, buying a house, and doing that entire process themselves. This is where crowdfunded real estate comes into play. So in this video, we're providing you with a complete beginner's guide to crowdfunded real estate and exactly what you need to know before you get started with this asset class. And a big thanks to Streitwise for sponsoring this video, but more on that a little bit later. So starting off, let's talk a little bit about how real estate investing has traditionally worked in the past. Now, most people would agree with the statement that real estate is a powerful investment. It's one of the go-to investments of many of the richest people on the earth and just the upper class in general. But it's also not an asset class that everyone feels comfortable getting into, especially if you aren't sitting on hundreds of thousands of dollars to go out there and start buying up properties. Now, the traditional process for getting started with real estate looks a little something like this. First, you have to go out there and qualify for a loan. So this is going to depend on your credits, your income, your employment history, a number of different things you're going to have to show to a bank or financial institution in order to qualify for a loan. Then you'll need to find a realtor. You'll need to go out there and actually search for a house to buy, find something that's going to be a good deal that you're going to be able to rent out successfully. You'll need to put in an offer, close on the house, have an inspection, do your due diligence. You might want to renovate, refresh the property, maybe do some painting, some minor repairs, do a whole major remodeling project. You'll screen your tenants, you'll chase them down for rent, and then you'll repeat this entire process for the next property you want to buy. So all in all, this can take 3 to 6 months at best and can result in a lot of headache and a lot of just time invested into investing in real estate that you might be better off using elsewhere. On top of that, each of those 8 steps kind of has their own flow chart. I mean, just for example, screening tenants, you're going to have to run credit checks, background checks, maybe look at their employment history, putting together a rental agreement, collecting their security deposit, collecting rent. I mean, the list kind of just goes on and on for each of those individual steps. Now, this is where the idea of crowdfunded real estate comes into play. You ask yourself the question, what if somebody else facilitated that entire process and you were solely the investor that was contributing their money, and then all of the kind of time investments that are required to participate in real estate were handled by somebody else? Now, the two major options for this currently are either to go down the crowdfunding route or the REIT route. Now, let's start off first by talking about crowdfunding. Now, if you're familiar at all with platforms like Kickstarter, that is actually an example of crowdfunding, but crowdfunded real estate is going to be a little bit different because instead of finding people to back someone's business or side project, real estate investors are coming together to pool their funds and invest into a property or a deal that they may not have been able to afford on their own. So you're basically getting a group of investors together. They're pooling their funds, using those funds to purchase a property. Now, a REIT, on the other hand, is going to be a little bit different. A REIT is a certain type of company that has to meet a specific set of rules in order to qualify for a beneficial tax status. So essentially, a REIT has to be a company that holds real estate and pays out distributions of the majority of their real estate income to those shareholders. Now, within the category of REITs, you've actually got a number of different subsets. These include private REITs that are open to accredited investors and tend to have higher minimums. You've got public REITs, which are available to be traded on public markets, similar to stocks or ETFs, and are available to non-accredited investors as well. And then you've actually got another category called public non-traded REITs. Now, these are REITs that are available to both accredited and non-accredited investors, but you're not able to buy and sell them on a stock exchange. Instead, you buy them through a particular platform like Streitwise or another crowdfunded real estate platform. Now, to break that down a bit further, like we mentioned, in terms of availability, accredited and non-accredited investors are going to be able to invest in both public REITs and public non-traded REITs. There are going to be some restrictions with the public non-traded REITs, but in general, you'll have access to those regardless of whether or not you are accredited. As the name would suggest, only publicly traded REITs are available to be traded on public exchanges. Both private REITs and public non-traded REITs will not be traded on major exchanges. Now, with both public traded and public non-traded REITs, you're looking at lower minimum investments. Generally, public traded REITs have the lowest minimum investments with only one share needing to be purchased. With public non-traded REITs, you might be looking at a bit of a higher investment, usually around $5,000 is where most public non-traded REITs start, whereas private REITs can be well into the 5 figures or even 6 figures for a minimum investment. Now, because they are not traded on a major exchange, both private REITs and public non-traded REITs are going to have lower liquidity when compared with publicly traded REITs. Because with a publicly traded REIT, you can just go onto your stock brokerage app, whether it's Robinhood or whether it's Fidelity. You can put in a sell order for your REIT shares, and those can be sold almost instantly if there's a buyer on the other end. Now, due to the liquidity of publicly traded REITs, they tend to have higher correlation to the stock market because similar to stocks, you can trade them directly from your brokerage account, which tends to drive a bit of a correlation between those different asset classes, whereas with private REITs and public non-traded REITs, that correlation is going to be lower. Now, who's actually eligible for these investments? Well, in the past, you had to be an accredited investor because most REITs were going to be private REITs. In order to meet that accredited investor requirement, there are a number of different avenues, the two most common of which are the income requirement or the net worth requirement. In order to meet the income requirement, you must have an income of over $200,000 or $300,000 if you are married. To meet the net worth requirement, you need to have a net worth of over $1 million, excluding your primary residence. However, through platforms like Streitwise and many others, these requirements are no longer in the way of investors starting to get exposure to real estate. That's because with these crowdfunding platforms and REITs, you're able to access the asset class of real estate without going through the traditional process and hassle that most real estate investors had to go through. This allows you to invest in bigger deals, receive consistent distributions, and net some pretty high dividends when compared with stocks and ETFs. In some cases, you are also able to get exposure to a professionally managed portfolio, which can be a big attraction to many investors that don't want to deal with the hassle of managing a portfolio themselves. Now, Streitwise is one of the most popular platforms currently for investing in real estate, so let's take a deeper look at this platform to give you an idea for how it works and how many of the other platforms are structured as well. So Streitwise is an example of a public non-traded REIT, meaning that you can only buy and sell shares through their platform, but they're open to both accredited and non-accredited investors. They focus specifically on office buildings in secondary, suburban, and urban markets, and their minimum investment is about $5,000, which is pretty on par for most public non-traded REITs. On top of that, you'll be able to redeem your shares after 1 year, but there is going to be a discount schedule based on when you redeem your shares. This basically means that if you're redeeming your shares anytime before 5 years have passed, there is going to be a discount applied when you sell. You're not going to receive the full value of your shares. But if you wait 5 years, then you receive the full value of your shares whenever you decide to sell. Now, Streitwise is a bit unique when compared to many of the other investing platforms out there. One of the reasons of which is because they invest exclusively in Class A office buildings. So if you're looking for direct exposure to commercial real estate, that's what you're going to find with Streitwise. Additionally, they only lease their buildings to high quality tenants, meaning that their likelihood of collecting rent from those tenants is significantly higher, which leads to a higher likelihood of you receiving that full distribution. Speaking of distributions, they also provide some very healthy dividends, currently around 8.4% per year, paid out every single quarter. They've also got significant skin in the game from their founders, meaning that their founders have personally invested funds into their REIT, over $5 million of which is quite sizable. So now that you understand how crowdfunding works and how one particular platform is doing it, the question really is crowdfunding right for you? Well, many investing experts will recommend that you have some percentage of your portfolio allocated to real estate. Generally, that's about 5 to 10% based on most expert recommendations. Now, in order to do that, you have a number of different options. You could either invest in real estate yourself. You could go out there and find some commercial real estate to buy. You could invest in some multifamily properties. You could go through a real estate investing platform. You could go the crowdfunding route, the REIT route. There's really a number of different options for you. But for many investors that are just getting started or don't have a multi-million-dollar portfolio, crowdfunding is going to be one of the best ways to go because the low minimum investment and the low time required in order to manage that investment are going to be quite attractive to you, and getting that additional exposure to real estate, which has a lower correlation with the stock market, can help to potentially boost your overall portfolio returns. Now, I want to give a big thanks to Streitwise for sponsoring this video. If you want to learn more about the Streitwise platform, the different offerings on their platform, and potentially get started investing yourself, you can check out the link in the description and pinned comment below. That'll take you directly to their website to view their current offerings. And if you have any questions about Streitwise or crowdfunded real estate in general, just drop those in the comments and we'll make sure to get back to you.